because tech wants you to be in debt.
We've been talking about this concept for a little over a month now.
Yeah, everyone's making memes that now DoorDash accepts Klarna for orders over $35, which means you can get Chipotle for you and your friends and pay for it in 4 easy installments.
Seems like a silly thing, but I did pay $80 the other day at Dave's Hot Chicken.
It would have hurt a lot less if it was $20 over the next 4 months.
I'll say it was really good. I've been really interested in this whole ecosystem because it's really difficult to go 10 feet in a mall without tripping over a billboard saying how you can buy now, pay later, your whatever nonsense.
And it's always different ones. It's Afterpay, it's Klarna, it's Zip, it's the PayPal one. I'm like, these are everywhere. And it seems a little bit like I'm kind of wanting to look into that because I'm like, this is everywhere and it's zero interest.
Yeah, that's the thing. This is not the same thing as like a payday loan, right?
Because the big thing with those and also with a lot of credit cards is that like, the interest, these are not really like that. Like you are just paying if you do it in the installments they do.
For someone who has maybe never used one of these services, such as myself, can you help us understand? So I want to go and buy a Switch 2. So normally, like on the website, it'll advertise like 4 easy payments broken up over like a few months or a few weeks or however it works. How do these companies actually make money if they're not charging you interest, late fees, or where's it coming from?
The late fees generally tend to be pretty forgiving. I've never paid them, but that seems to be the general consensus of people who have used these. The actual kicker is they are charging a percentage to the merchants.
Oh, so if I buy my Switch from Best Buy or whatever the thing is, Best Buy are the one who are paying Klarna because I'm much more likely to buy it.
It's the same way that they pay a credit card fee or whatever. And that is a good deal for Best Buy because a lot of people would not be buying that thing at the full upfront price otherwise.
I saw this all the time when I worked at Best Buy. If someone, bought a TV and we're like, hey, if you're on the Best Buy credit card, they're much more likely if they had that to be like, oh, you know what? I will get the HDMI.
Absolutely. Bundles, and then also just, even if it's not being bundled, but you're like, oh, instead of spending $500, I only spent $100, so now I'm feeling like I can spend
but hang on a
more.
second. I just want to wrap my head on this then. I understand that, fintech, it's sort of a new, much less regulated kind of thing. A credit card has to go through a bank, and it has to have insurance, and has to go through credit checks, blah, blah, blah. Like, there's a very established system. Stuff like Klarna and Afterpay, they're not attached to that normal system. Are they really making money? Thank you to Squarespace for sponsoring this video. You know what your latest project needs? An online presence beyond just social media. Squarespace has everything you need to get started building an online home for your brand.
Graphic design not your passion? Squarespace's design intelligence feature puts 20 years of design expertise to work with tools to guide you through every step of the design process. You can even get help with copywriting.
If you want to get aesthetic with it, then Squarespace has a wide array of built-in visual design effects. It's super easy to pick out and apply that extra design sauce that will elevate your brand's visual language.
And it's a breeze to set up your site to sell whatever you want, whether it's your time, your content, or your merchandise. You can easily put up online courses, blogs, and videos behind a paywall. All you have to do is upload, set the price, and choose if you want a one-time fee or recurring subscription.
So are you ready to become a website wizard? Well then check out squarespace.com/thisis to get your free 14-day trial and 10% off your first website or domain. And of course, huge thank you to Squarespace for sponsoring this episode of This Is.
I don't want to get super duper into like the nitty-gritty fintech, but basically what it is the way that these companies function is they take out loans, right? From actual banks, and then they use that money. It's like a cycle rate, but they are making money. They do that to make money. They are taking on this risk, but the general idea is that you will generally pay that back.
But what happens if I don't? Are they gonna rent-a-center me? Are they gonna like break in my window and steal my Switch back?
There's like late fees, and in general, like the idea is they're making money because it's this unregulated. Like this seems to be the move now for these like startups is to find a like transaction or system that you can insert yourself into as the middleman, providing like added convenience to someone. It seems a little bit like mostly above board.
The messed up part about all of this is there are things that double it down. Amazon has a system as well where it's only if you use your Amazon credit card.
That's like 2 layers of stupid.
Yeah. So it was like, it spread it out over 6 months, no interest. It's automatically charging the credit card, which does have interest.
I get the idea. Like it feels like, okay, so just like on the face of it, it feels like a useful tool as a consumer. So say I want to buy this thing, and instead of having to pay interest on my credit card or whatever the case is, I can buy it now. And theoretically, there's no downside for me to buy it. It costs me the exact same amount of money. Like, I mean, that's just literally just a smart decision.
We also,
speaking, right?
I think that's where we can start talking about like credit reporting. This currently, they don't credit check. You can talk a lot about credit checking and credit scoring and why a lot of that is like probably bad and unethical and stuff. But one of the things it does serve to do is people who are lending money can see what other lines of credit you have going.
Hey, buddy, you bought 74 Nintendo Switches 2s to flip on eBay last month. I think we're going to cut you off right about here.
Here, it's a little bit more wiggly because Klarna doesn't know what you have going on Afterpay, and they don't know what you have going on Affirm, and they don't know.
Talk to each other?
Why would they, right? They're competitors.
So, wait, hold on. Now, this changes things dramatically. So, are you saying that I could buy a Switch 2 using Klarna and Afterpay and yada, 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 and no one knows how much debt I have racked up and how likely I am to pay it back?
Pretty much. This doesn't seem sustainable. However, what ends up happening is like, the girl math meme. It's a stupid meme, but it's like it's a real like psychological process of if you had to pay $80 for whatever you were buying, you'd be like, okay, that's enough. But if I had to pay $20 for 4 months, and then I'm doing that with 4 other things now because I felt like I only spent $20, that gets people into trouble somewhat quickly.
I know for me personally, I need all of my bills. I want everything in one page. If I have to think like, oh, I have this credit card here, I have this card here, that I'm gonna miss something. I'm gonna forget something.
Humans not meant to comprehend that many numbers at
100%.
once. Now that we're in this kind of uncertain time where stuff is going to become more expensive, this is gonna be something that I think a lot of companies will rely on a little bit more because sticker shock is your kind of like your gut level financial management technique, and they are softening the blow of that. And I don't know, this could get more aggressive. Like they could start like, pushing the full price to a little bit like and leading the same way that like infomercials back in the day, they'd be like, it's always 4 easy payments of only $19.95.
Plus shipping and handling, of course.
These companies like these merchants and also people like Afterpay are investing heavily in removing friction. We're in the frictionless ecosystem. We have Apple Pay, we have Tap to Pay, the one-click PayPal. That's always been a fun one of like, it's so easy to do.
That's a big reason why credit cards went from swiping to chip to tap, because it was all about saving that 1 second, 2 seconds, 3 seconds, which on the scale of a global retailer can be billions of dollars over, years and years. I get this sort of general concept now. It's funny to make fun of, financing your Chipotle burrito. Like you could do questionable things in lots and lots of contexts. But specifically talking about the tech side of things, because I completely agree with you. There's no doubt in my mind that over the next several years, it seems highly likely that you're going to be paying more and more for your next gaming PC, your graphics card, your Switch. So what do you think the impact of more and more stores bringing in this ability to break it up is going to be? Because to me, I think most people, and I'm just guessing, I don't have any data on this, but I would assume most people who are buying large purchases right now probably put it on a credit card. And I think that there's a very good argument that if you treat credit cards with respect, aka you don't carry balances, you pay it off, then it's a perfectly reasonable thing that has like built-in fraud protection, and you get to call somebody if something's wrong, and chargebacks, all this kind of stuff.
That's another thing, that this kind of thing stands to potentially complicate the return process. If you buy something straight with a credit card or a debit card,
goes right back.
I think these retailers do have like some responsibility of like, you need to make your return process make sense, but it just adds another complicated step. And I think you say most people would put a big purchase on a credit card, and I think there's actually more complications to that because generationally speaking, that is not necessarily true. Gen Z and like younger people grew up in this financial crisis time, and they don't trust credit cards. I've definitely had to like talk to like younger people. A lot of people are like, maybe they know someone who had to deal with a bunch of like credit card debt, which is like a real problem. And they're like, I'm never doing that. I think the other thing too is that this is something where it's not going to be the exact same, I think, as like Uber, where Uber was like, okay, we subsidized and made it. But I do think there is a lot of potential, especially as things become more expensive and people become more reliant on this, for this to get worse. Like, who is to say that we're not going to get more, like, we're not going to, turn the screws and then make the interest kick in, or have other players come in who make it look like it's the same thing, but there's like a catch to it. The one-clickification, frictionless economy is the big elephant in the room, is the sports gambling apps.
Oh, don't get me started on sports gambling. Yeah.
In an economy like this, you have all these like recession indicators, but I think so much of it too is like the grifters have to work twice as hard, but they also have to work twice as smart. And this isn't necessarily a grift right now, but
it's problematic. Like, I think anytime you're talking about financials and you're talking about like opaque structures where you're not super clear on what you're paying, how much you're paying, when you're getting stuff, and coming back to kind of the old school approach of, okay, you have a credit card and you pay it off at the end of the month, theoretically, if otherwise you pay interest. The way that these companies make money, generally speaking, in addition to the 2% fees or whatever when you swipe your card, is that when you pay interest, that's just money for them. If you sort of take yourself away from that system, you put yourself in the context of a generation who's not really wanting to deal with credit cards, when does this thing not make sense? Like, yes, they're maybe making enough money right now, Chipotle or DoorDash or whatever are paying them the percentages that they need, but at a certain point, if you as a company are trying to make a bunch of tiny little loans to tons and tons of people and people start to default on that, the way that traditional banks have worked is that they have to have so many reserves and like there's all these rules and regulations, which I think mostly financial companies should probably have some rules and have some like regulations on like how they do things. It feels like to me this is like a giant house of cards that is just waiting for
regulation to come in.
There is all sorts of parachutes for all of these companies. All right, say you start defaulting on your burrito loan.
God, I hate it so much.
I mean, like, look at Rent-A-Center.
Yeah,
you go and rent to own a lamp.
Also, when it comes down to like the whole rent-seeking economy,
debt consolidators come in, they pay,
and then you're in debt to me.
You pay them.
Yeah,
it's kind of like the mob of these are all just bridge loans. I would say statistically, most people don't default on their stuff. Yeah. They just pay the minimum. Oh, it's great. I'm not defaulting. I'm not going bankrupt, but I'm also not paying any of this money actually back. But like, it's just being shifted around from party to party to party. Then also, like, the government comes in and says, you know what? Oh, the bank lost some money. You're too big to fail. Here's a bailout.
There's like no adults in the room in this whole situation,
well,
right?
And so like with
more,
startups, it's a little bit more wiggly, but I guess I wouldn't be surprised if you see like merging happening.
Yeah. So I'm actually curious from a technical perspective. I get, again, the credit reporting system is freaking ancient, blah, blah. But like, it has been around for these kind of companies. They had no information on you whatsoever. I'm assuming that they would have to go give you a very low limit, but they've got to be sourcing stuff from all kinds of maybe nefarious places, right? I'm sure when you go to sign up for a Klarna or whatever, surely they're got to be buying all kind of data on you immediately.
Well, I guess the other flip side of that is now they have information.
The more of these kind of things that exist, the easier it is for consumers to swallow higher prices on tech, right?
Sticker shock mitigation.
Like, who wants to pay $2,500 for your RTX 5090, but you can break it up across 6 months. That won't be so bad. Like, I feel like it's really easy to be soapboxy here. Like, I want to come into this with a more of a like, it's just a really weird sort of way, because it's just not the way that normal things have been set up in the past. If you are disciplined and use these things correctly, they can be beneficial. Like, I don't think there's necessarily anything wrong. If I can take a payment and split it up with no interest, you would be a complete moron not to do that. It makes sense for you if you, especially you're not paying interest, you could be doing something else with that money to make you more or whatever the case is. But I think the fact that these things are very opaque, it's very hard to know what's what. And you as a consumer, I think, can be so easily sort of like scooped up of you have 7 apps on your phone, you owe $100 on this one, you owe $30 on this one next week, you owe $200 on this one. Oh, by the way, your credit card's due. Oh, and you've got to pay this rent and everything. Like,
and I think also the subscriptionification of things. It's not quite the same, but it's adding to like the monthly charges that you're getting. This is coming in the wake of like every single software ever adopting the gym membership model.
It's super interesting to me to think about at the same time that prices are going up on tech that I think we all love and appreciate. If you look at it as pure MSRP pricing, I wonder what the percentage of people who actually outright pay in whatever currency and form you want to do, but outright pay for a thing and fully pay it off immediately versus people who let stuff sit on credit cards, put it on Afterpay, whatever the case is. And I wonder if companies are using that in their calculations, just the same way that a store is clearly looking at the math that, Klarna comes in to present why they should be, their main sort of buy now, pay later service in the store. I'm sure they can walk in and go, hey, you know what? People use our service are likely to spend 30% more. And you as a Best Buy or Target, wherever, can do the math and go, oh, if I get my customers to spend 30% more, it's going to be X number more. And then they can start rolling that extra cash into raising prices. Like most things that are of somewhat good value, there's almost always a dark side to it. There's almost always a way that things could go wrong. And my gut here is that it is going wrong for a lot of people, especially when there's not 30 different services that are all doing the same thing and they're all hungry to get you to sign up for their app.
Like, potentially they all have different terms, and
exactly.
I think the other thing too is everyone wants to believe that like you're very like smart and rational. Everyone wants to believe like, yeah, you know what, I'm responsible with my money. There's so many like little things like this isn't exactly a dark pattern. These retailers are so incentivized to build dark patterns into their apps. How many times have you gone on Amazon and seen the price, but then there's another price that's crossed out that makes you feel like, oh, I'm getting a good deal because this is on sale.
That's why I shop at JCPenney's exclusively. It's always on sale. Did you know that has a current sale on our subscription? Normally, it is $34 a week. However, right now, you can subscribe to This for free. Only for a limited time. Subscribe right now. Otherwise, it's going on your credit report that you didn't subscribe.
Have you seen the thing? It's like, I put in $10, you put in $10, I buy the whole stack for $20. We both just made $10.
Wait till you find out that the money you put in a bank isn't actually there because they loan it to other people, and that's the way the whole banking system works.
They loan it to Klarna, and Klarna loans it to you.
What do you think about Klarna, Afterpay, and these very many buy now, pay later services? Hopefully this was an interesting conversation. I will actually say I've learned a lot. Like, follow, subscribe, and you too can get rich quick. I mean, not go into horrible crippling debt by watching the This Is channel.
Yes.